Aloha, everyone. Joshua Hayes at bigwavetrading.com. I'm going to kind of keep the market commentary short. Nothing has really changed in these video lessons that I make every weekend since the Jackson Hole meeting. Nothing has changed. And following the FOMC announcement, especially the commentary that followed via Jerome Powell, it's safe to say that the job is not done. There's no reason to think, and I don't even know why people even talk about this, honestly, but the older you get, you'll realize how silly it is calling tops and bottoms the longer your career goes in this industry. It's silly without hard evidence. And what do I consider hard evidence? Well, you got to understand you can call bottoms and reversals all you want in QE environments, pullbacks, especially when you have all these moving averages stacked properly. And in case you guys do not know, it's a 200, 150, 150. And then for trading time frames, I have a 9, or you can use an 8 EMA. Technically, that's the one you should use for Fibonacci, but because I day trade, I do use the 9, as a lot of prop firms, including the hedge fund that I first worked with back in New York City, used, and the 21 EMA. When the moving averages are stacked like this, sure, feel free to quote, call a bottom all you want on pullbacks, especially whenever you get reversals at these key lines, like the 50 here holds, you get a reversal here off the 150. This is all during a QE environment when we have the Fed buying assets on their balance sheet and basically quantitative easing. They're friendly with their monetary policy, interest rate policy. We do not have that. They're still hiking rates. There's been no pivot, official pivot. I don't care about the narrative. Right here, this June to August rally, this was a great rally. It made sense to me up to this 100, but this 100 to 200, I started to get really nervous. There were some metrics that we track that indicate, hey, we could have a bottom here. But what did I keep saying that we need to see, guys, for me to actually say, okay, I think we actually have a bottom here? I need this VIX over 40. And as you can see, it can spike all the way to 80 before you get a good low. Let's see if I can get a weekly chart on this. Yeah, and you can just see here, major serious lows. You get big spikes. You didn't necessarily get it in 2001, 2002, but you did get it over that 40 level. You got it in COVID. We have not printed over 40 at all this year. I'm sorry, guys. Until we actually do, I cannot, in any good conscience, say that I believe that we have a quote bottom in the market. Sorry, I'm going to erase all those lines really quick for everybody. So that's the way that looks on SPY. So I need to see the VIX over 40. I need to see the equity put call ratio trade at 1.2 and sustain itself over 1. We've come nowhere close this entire downtrend. And at this point, this bear market has lasted for so long, especially if you look at small caps. I mean, we can just use ARK as a proxy for small caps. They topped in February of 2021. This market has gone on so long as a bear market that I now need to see equity outflow via mom and pop, the 401k funds. If you were not a member of Big Wave Trading and you did not sell in your long-term portfolios, which I consider are 5 to 20-year holds, in big cap names, stocks that you go everywhere you go, Nike, Apple, McDonald's, these kind of stocks, in long term. This is not performance-based portfolios. These are not swing trading portfolios. These are not position portfolios. These are for mom and pop with long-term time horizons. You can also just do the SPXL, SPY, TQQQ, QQQ on the way down. But if you did not sell at the top of 2021 and you're down here, this is where, if we continue to sell off, retail finally starts to panic. And just to let everybody know, historically, when you're in bear markets, normally bottoms do not occur after a long period of equity inflows, like we saw throughout 2021 into the 2022 highs. You normally need to at least lose a third of that via outflows before you hit a low. And that normally will then line up with that equity put call ratio at 1.2, the VIX at 40. We've lost about 5 to 6% only of the previous inflows. And it's possible, if we do not get the Q4 rally, which I think we will. By the way, I still plan on doing quarterly portfolios in November, but they will not be active, and I'm going to remain in cash until we hit a seasonally bullish period, which is at the end of November, when seasonality turns bullish from the 21st through the 30th, which averages annualized to 1950 of a 41% gain. And even then, if we're making new lows in the SPY, I'm not even going to give out the list of leaders. We'll go over the current leaders. I got them all over here. We're going to run through them all at the end of this video lesson just to show you guys where you need to focus. But I'm thinking if the selling continues in some of these big cap stocks, look at Meta. And I want you guys to remember these charts, because whenever we go over all the stocks that I have over here, I want you to think about how they look versus stocks like Meta. And I want you to realize old leaders are usually not new leaders in the next bull market. These are now starting to have all the characteristics of bygone leadership. Will they come back? They might in Tesla. I can see Tesla coming back. But whenever I look at stocks like Meta, even Netflix, which is the best looking one of the bunch, and I look at how far it is off the highs, it's really hard for me to think that we're going to see any kind of super outperformance, Microsoft, Apple, Google, Amazon, anytime soon. And if these continue to sell off, I'm sure mom and pop, which these are the stocks that everybody owns, they'll start to freak out. Now, just to let you know, I will be doing the opposite. If Amazon keeps coming down, I will, in the long-term portfolio, buy more. Same with Meta. Same with Apple. For the long-term portfolios, I'm doing the opposite. Guys, when they were up here, I was selling. So I welcome the bargains now at this point. For the overall market, like I said, let's keep this simple. These are good markets. You can be very, very aggressive when you have price above the moving averages. Price above the moving averages. Pullbacks, buy. Price above the moving average. Pullbacks, buy. Look at the current condition of the market. 200 down. 150 down. 100 down. 50 down. Short-term moving averages, we got some positives. So we get above the 9 here, fall back below the 9, get above the 9, and now we're back above the 21. So now what do we want to see? We want to see the 9 hold as support. That did happen. You break out above the highs, you're good to go. Now that we're above the 9 and 21, you want to see the 21 act as support. Did that happen? No. So now what we have following Wednesday is another quote control bar. When we look at the moving averages and we look at previous resistance levels and support levels, and we use a Fibonacci retracement, because I always love my Fibonacci's, from the low of 2020 to the high in 2022, from the high of 2022 to the low in 2022. Here are your current support and resistance levels. You can see below, there's only 3. Well, there's also some Fibonacci levels that line up. And then from the lows, you definitely want to see 320 hold. If we don't hold 320, I believe based on previous bear markets, we have room all the way to 250. So we want to see this level hold. This is the final line in the sand before we could finally collapse into the 250. So we want to see those levels hold if you're bullish. If you're like me, you don't care what the market does. You flow with it like water. You pour water into a bowl, it becomes the bowl. You put water into a square, it becomes a square. You put water into a rectangle, it becomes a rectangle, and so on and so on. You should all know your geometric shapes, from a rhombus to a trapezoid. Water adapts and flows to it. So besides these support levels, now what do we have as resistance levels? Well, right here we have 2 key Fibonacci retracement levels based off those 2020 lows and 2022 highs. We get above that, though, right where the 100 SMA is this key 390 level. This has been the level we've talked about all week long. Former support, becomes resistance, becomes support, support, now resistance, now resistance. This is the key line in the sand. You even get above 390 though, bam, there's the 150, bam, there's the 200, bam, more resistance lines, resistance lines, resistance lines, resistance lines. Bottom line, without that VIX at 40, equity put call at 1.2, equity outflows, and or more importantly, the Fed not going from 75 to 50 to 25 basis points, not going 25 and talking about cutting. When the Fed actually stops hiking rates, that's good too. But when they actually cut, when there's a cut, now we have a real Fed pivot. Even if I don't get all those former metrics that I talked about, now you're piquing my interest. Now I'm looking for an actual bottom, especially if they start buying assets on their balance sheet again, which they are currently still selling them off. At least they're doing it. Before, they were always talking about selling the assets on their balance sheet, and they weren't doing it. If you look at the Fed balance sheet, they are definitely selling them off. So that is what we have to look forward to. I personally think it's going to be really choppy. I want to have a bullish bias into Q4, into February of 2023. I believe 2023 will be the year of the recession. Stock markets bottom during recessions. So that's how my current outlook is aligned. Will it happen? I don't know. I will adapt to new information. If a meteor slams into the earth, do you think that I'm going to have that Q4 bullish bias? No. Another black swan event will happen. So you're going to have to constantly adapt. So just keep that in mind as we move forward. So now what I'm going to do is I'm going to show you, we've had quite a few winners in big weight trading. And I want to show you what they look like. And at the same time, I want to go ahead and go over all the current stocks that I'm looking at that are leading and trying to see if there's a game plan to get long any of these names. So first, let's take a look at some of the winners that we've been able to get a hold of lately. I like using IntelliChart version 7 for my swing trades because it's just easier to track. And also just to let you know, once I'm long a stock, I put it into the system. Number of days and less 83. This cannot be manipulated. Now that the stock is working, I cannot go back and add a triangle on this chart right here. The triangles show up only after I add them into the system. There is no way to manipulate this triangle. So what you're seeing is what happened. Not only that, you can always take a 2-week free trial and see for yourself. Every trade idea I have, I give you the night before the market opens, and I tell you exactly where I'm getting long, exactly where I'm risking to, and I give you my complete game plan on the position. So not only that, but you get to front run me because I publish the new swing trades before I enter the orders in Interactive Brokers Trader Workstation every night. So with that being said, this was the signal on GET, triggered and filled here. This was the initial final stop. GET, 19% gain, slow mover, very thin. You can't get a lot of it. Just want to show you an example of how stocks work out. Reclaims the 50, pocket pivot point signal, looks good, doesn't look great, isn't good, but a bullish chart, it is working out. UFPT was a recent long signal right here. You can see the volume, the BOP surge, the pocket pivot point signals. Good earnings winner, up 22%. Will I be selling a little bit more at the market on Monday? Absolutely. I did after this day. I did more after this day, and I'll be selling a little bit more. Would I be doing that in a rip-roaring, raging bull market? No, absolutely not. INGR, this was the signal, gapped up, no fill, came back down, has to trigger up and through the level. Happens on this day. INGR, 14% gain. Not too bad in a bad market. NBN, you want to see a long-term winner, guys? NBN, look at where the white arrow is. I want you to look at what the signal looked like that day. Look at the volume. Look at the BOP below. But more importantly, look at that volume. Look what it does. Perfect. That's how they're supposed to work, guys. They work immediately, and they keep working. Beautiful. That's what they're supposed to do. NBN, 199% gain since the signal. How much do I have left? I don't have any left, guys. Guess when I got knocked completely out? Let's see. I think it was right here. That tail right there. It got me. But on an end-of-day basis, for those that are still long, it has not triggered a 100% end-of-day sell signal yet. CVRX. Price. The clean volume. The clean balance of power. 82% gain since getting long. RNW. Off the lows. Power. Power. We get long. There was even an ad signal right after that. 13% gain. And then we'll do another ER winner. ELF. We got long. Why? Pocket pivot point signal. Power. No selling. We get long. ELF up 21%. I sold some at the market at the morning on Friday following this move. Am I going to do more on Monday? Nope. Why? There was no further real extension. So you can see some of these leading stocks and how they're working. And I know a lot of people keep asking me about this, but I want to show you why you should always be focused on the leaders. We got a lot of good looking charts out there. Will they work? I don't know, but I want to show you them. So right now, this list has not been updated. I added a couple of stocks in here that gapped up on earnings throughout the week, but this list has not been updated since last Sunday. So it is a week old, but I'm going to show you guys. You got to always, there's always winners out there. PODD, MSI. I think with all of these, if you want, you can see if any of these can pull back to the 21 EMA, give you a hammer candle off the 21 EMA, and as long as the Chaikin money flow is still green, they are actionable. You can also do fresh breakouts of bases, but just realize the kind of market you're in. It's not really favorable. But PODD, MSI, ON, still considered a leader. TNK, this is a stock I'm long. I want you guys to notice the moving averages, 200, 150, 150. Notice that the best and cleanest ones will have these moving averages stacked properly below them. Pac B, working on it as a leader. Showing you all the stocks I'm watching, guys, in my watch list. CAH, see how this broke out and worked? Look at the moving average structure. Any surprise? No. Do I regret not having it? Yeah, here's another one that I screwed up on. MOD. MOD, right here above the 50. Yeah. Kept waiting for a pullback to the 21 EMA, guys. Never got it. What are you going to do? Should be in the list. MOD, I don't know why I don't have it. HAL, CAH, STLD, Rambus, WWE, AMKR, AEHR, FBP. But look at these stock charts. SNA. I know they're not in the hot technology group, but look at all these stocks. Look at where they're at relative to their 52-week highs. And think about the overall market. And just look at all of these. I don't see any, to me, that are actionable. See something like this, but you want to see that hammer through the 21 EMA. CFR, I see nothing there. VSH, XOM. So all these are pretty much extended. DVN, a breakout above this recent high, you could get long. There's a reversal hammer off the 50, but look at CMF. It's red. It's not actionable to me. XLV, healthcare. I'm letting everybody watching this video know that I believe that this is going to be the leading sector for 2023. GILD, TRV, MRK. Really don't see anything on any of these, but heck, at least you got a nice leader list here. TTC, SIGI, REGN, here you go. Green CMF, hammer candle through the 21. If you want to get long, cut your loss with the close below there. That's an actionable idea. CI, VRTX, Eli Lilly, Halo, CPB, ADM, AZPN, First Solar, EMPH, CCRN. NBIX wasn't on there. Let's add an NBIX up there. So as you can see, there's quite a few leaders. There's still a lot of good looking names out there. You just have to be selective and always focus on the leaders. And more importantly, once again, look at these moving averages. I really suggest everyone focus on stocks that are in consolidation areas with a 200, with the 150 on top of the 200, 100 on top of the 150, and 50 on the 100. Hope this video was helpful. If you learned anything new, like, subscribe, share, show me some love. I love you all. Have a great weekend, everyone, and great luck during the upcoming week in your personal trading. Aloha.